payment process. So section 49 and section 50, only two sections are there in this. Section 49 talks about what are the various ledgers, electronic ledgers, which are to be maintained by a registered person, maintained by GST network on behalf of the registered person, and section 50 is about interest on account of delay in payment of tax or wrong availment and utilization. So section 49 says that on behalf of every registered person, GST portal will be maintaining three ledgers, that is electronic liability ledger, electronic credit ledger and electronic cash ledger. And whatever balance that is there in electronic cash ledger can be used for payment of tax, interest, penalty, fee and others, tax dues and other dues. But whatever balance that is there in credit ledger can be used only for payment of tax dues and cannot be used for payment of other dues. And how the money will come into the electronic credit ledger? Either whenever we take ITC through GSTR 3B or ITC 1, that is availment of ITC on closing stock, or ITC 2, that is transfer of business, or ITC 2A, single registration getting separated into multiple registration. All those ITCs will come into electronic credit ledger, and the outflow of the credit ledger is for payment of liability ledger. Then how money will come into cash ledger? Maybe deposit through GST PMT 6 challan and TDS TCS deducted by recipient and the e-commerce operator. So that will also be given into electronic cash ledger, and any refunds that are to be given, for example excess payment of tax etc., that refund will come into the cash ledger. And whatever money that is coming into the cash ledger, the outflow of the cash ledger is for payment of liability ledger. Whatever is the outflow of liability ledger, that will be inflow into the whatever is the outflow of credit ledger and cash ledger will be inflow into the liability ledger, and liability ledger is used for payment of tax dues and other dues. So electronic liability ledger is in PMT 1 and credit ledger is in PMT 2 and cash ledger is in PMT 5. And whatever balance that is there in the electronic credit ledger or cash ledger, after payment of interest, penalty, fee or any other amount can be refunded. But there is no restriction with respect to refund of balance in the cash ledger. But the refund of balance in the credit ledger is possible only in two cases. What are those two cases? Inverted tax structure and zero rated supplies, only in those two cases. What is the meaning of inverted tax structure? The tax rate on outward supply is less than the tax rate on inward supply. Now we have some special points on electronic cash ledger. What are the various modes of deposit into the electronic cash ledger? So internet banking, debit card, credit card, NEFT, RTGS, over the counter cash deposit. But that over the counter cash deposit is up to how much? 10,000 per tax period. And now we have an amendment, UPI and IMPS is also allowed. So total 6 modes of deposit of money into the electronic cash ledger through PMT 6 challan. What are they? Internet banking, debit card or credit card, NEFT, RTGS, over the counter cash deposit up to 10,000, UPI and IMPS. Okay. Then when payment is debited in the bank account and not credited into electronic cash ledger, then communication to the payment gateway shall be made through PMT 7. That is, whenever the money gets debited in our bank account but not credited into electronic cash ledger, we will communicate to the payment gateway through the portal. So that communication will be in PMT 7. Then for transfer of balances between the major heads and minor heads in the electronic cash ledger, so one form is notified, that is PMT 9. That is, in the cash ledger we have total 4 major heads and 5 minor heads. What are the 4 major heads? CGST, SGST, then SGST or UTGST, and then IGST and compensation cess. These are the 4 major heads, and the 5 minor heads are tax, interest, penalty, fee and others. So now between one cell to another cell in the cash ledger, we can transfer the balances, that is in this 20 cell matrix. From any cell to any cell we can transfer the balances in the cash ledger. For transferring the balances, we will be using one form, that is PMT 9. Also, balance available in the electronic cash ledger can be transferred between distinct persons. What does it mean? Say for example, so if we have two distinct persons for A Limited in Tamil Nadu and Andhra Pradesh. Now, from Tamil Nadu to Andhra Pradesh, from electronic cash ledger, the balance can be transferred. Now, that is an amendment. Previously, this was not there. Previously, the balances can be transferred between these cells, from one cell to another cell. But now, the balance can be transferred between the distinct persons, from electronic cash ledger of one distinct person to electronic cash ledger of another distinct person. For transferring these balances, so we have one new form, that is PMT 9A. So, just write down what is the form? Form GST PMT 9A. Form GST PMT 9A is the form for transfer of balances between the distinct persons. But one condition is that here there should not be any liability, pending liability. Means we have utilized all the liabilities, but still there is some balance in the cash ledger that can be transferred to the cash ledger of a distinct person in the another state, and any cell to any cell it can be transferred. Okay. So, for that, what is the form? PMT 9A. Then, special points on electronic credit ledger. So, whatever balance in the credit ledger, we can get refund only in two cases. What are those two cases? Inverted tax structure and zero rated supplies. So, inverted tax structure means tax rate on output is less than the tax rate on inputs. Then, whenever we have made excess payment of tax wrongly paid or paid in excess, the refund will be given to the original source. So, for example, in a particular month, say July 2022, so we have got total liability in electronic liability ledger is 10 lakhs. So, how this 10 lakhs is discharged? Through electronic credit ledger, we have paid 4 lakhs, and through electronic cash ledger, we have paid 6 lakhs. Okay. Now, out of this 10 lakhs, there is some excess tax paid. Excess tax paid is 75,000. How this 75,000 will be refunded? This 75,000 will be refunded into the source ledger. So, what ratio the tax has been paid? Credit ledger and cash ledger 2:3 ratio, which means 75,000 into 2/3 will be given into credit ledger. Same way 75,000 into 2/5 and 3/5 will be given into the cash ledger. So, 75,000 into 2/5 is what? 30,000 will be given into credit ledger, and so balance 45,000 will be given into cash ledger. So, refund to the original source. So, that is this. So, when a registered person has claimed refund of any amount paid as tax, wrongfully paid or paid in excess for which debit has been made from credit ledger, then the said amount, if found admissible, proportionate amount debited from credit ledger shall be recredited to the electronic credit ledger. And for this refund, this 45,000 will be coming into our bank account. This 45,000 will be coming into our bank account because the payment is made through cash ledger. Whereas this 30,000 rupees will be credited back to electronic credit ledger. For giving this refund into bank account, they will be passing one order RFD 6. RFD 6 is refund order. But to give it as recredit into our electronic credit ledger, so that order will be passed in PMT 3. PMT 3. So, what is the purpose of PMT 3? Whenever we have tax paid wrongly and that tax is paid partly using credit ledger and partly using cash ledger, to give the refund into the credit ledger, so recredit into the credit ledger, they will be passing an order in form PMT 3. And there is one more form, that is PMT 3A. That PMT 3A is an amendment now. So, what is that PMT 3A? First, we have some balance in the electronic credit ledger. Please concentrate. We have some balance in the electronic credit ledger, opening balance. So, that balance in the electronic credit ledger is 4 lakhs, and we claimed a refund, ITC refund we claimed. So, ITC refund we claimed 3 lakhs. When we claim refund 3 lakhs out of ITC, means that 3 lakhs will get debited. So, what will be the closing balance? 1 lakh. The closing balance is 1 lakh. Now, what has happened? This ITC refund, whatever you have claimed, is erroneous. Means wrongly you have claimed the refund. So, therefore, erroneous refund, either you have paid or it has been recovered from you. You understood? Either you voluntarily paid out of your identification, you paid, or department has recovered along with interest. Now in that case, my question is, whenever you are paying back this, because it is erroneous refund, so first you got a refund 3 lakhs into your bank account, and because it is erroneous refund, you paid back that 3 lakh rupees, which means that 3 lakh rupees should again come into the credit ledger. Sir, credit ledger there was 4 lakhs. You claimed 3 lakhs as refund. So that much amount credit ledger has come down. Now it came into your bank account. From your bank account you are again paying back to the government because it is erroneous refund. Now again it should be credited back to the credit ledger. From where you took that money? You took money from somewhere, means when you are returning it should come back to that particular ledger only. So this you are thinking this much time. So this 3 lakh should come back into this particular place for giving back into this credit. So they will be passing one form, that is PMT 3A. So say this: when a registered person claims erroneous refund of ITC, upon payment of such refund along with interest and penalty, returning that refund along with interest and penalty, proper officer shall pass an order in form GST PMT 3A for recredit into electronic credit ledger. Okay. Then balance in electronic credit ledger can be used for payment of only tax, but cannot be used for payment of interest, penalty, fee and others. Even for payment of GST under RCM, can we use the balance in electronic credit ledger? No. We cannot use balance in electronic credit ledger for payment of GST under RCM. So therefore, balance in electronic credit ledger can be used only for payment of GST, that too under FCM. Can be used only for payment of GST under FCM, but not for payment of GST under RCM. And balance available in the electronic credit ledger may be restricted for utilization by the proper officer. Accordingly, we have rule 86A and 86B. First they gave 86A, 86B, then in the section they are making the amendment that balance available in credit ledger may be restricted for utilization by proper officer. Okay. And what is that restriction? As per rule 86A, suppose if we have availed some ITC and that ITC is there in our electronic credit ledger, this ITC can be suspended up to a period of 1 year if supplier is not in existence or not doing business from the place where they have obtained registration. Okay, again our supplier is not in existence or not doing business from the place where they have obtained registration, or recipient is not in existence or not doing business from the place where they have obtained registration, or invoice is missing. Okay, the document is missing, or you have not at all received the goods and you availed the ITC. See this. So ITC availed against an invoice by a supplier who is not in existence. What is the meaning of not in existence? Means department cannot identify him. That is the meaning. Not in existence means not that he is not there. So he is not in existence means department could not identify him, or not doing business from the place where they have obtained registration, or ITC availed by a recipient who is not in existence. So above point is supplier not in existence, here recipient not in existence or not doing business from the place where they have obtained registration. ITC availed without receipt of goods, ITC availed against invoice for which supplier has not paid tax to government, or invoice or debit note is not in existence. These are the 5 cases. In these 5 cases, whatever ITC that we have already availed in our GST or 3B and comes in our credit ledger will be suspended. Then what is the difference between this and that section 38 which we discussed? Section 38 is, first of all, we cannot avail it, it is restricted in 2B itself. If you have already taken, then it can be restricted in the electronic credit ledger, that is this rule 86A. Understood the difference? Then for what period it will be suspended? It will be suspended for a maximum period of 1 year. What happens after 1 year? After 1 year, so the person will be able to take this input tax credit back. You understood? Upon expiry of 1 year from the date of restriction, the registered person shall be able to debit input tax credit so disallowed, subject to any other action that may be taken against such person. Means this 1 year, it is like a temporary suspension. Means in that 1 year period, they will identify the supplier, or they will check whether it is a genuine credit or not, and thereafter it will be allowed back. Means you can enjoy that credit for payment of your liability. Clear? Then rule 86B. Rule 86B is restriction of utilization of amount with respect to electronic credit ledger. That is, we have to pay 1% of our liability through cash ledger, even though we have sufficient balance in our electronic credit ledger. So, for a person whose turnover in a month exceeds 50 lakhs, a person whose turnover in a month exceed 50 lakhs. What turnover? To whom this 86B is applicable? Any registered person whose turnover in a month exceeds 50 lakhs. Month, okay, month turnover exceed 50 lakhs. That to which turnover? Actually taxable turnover. Because while computing this turnover, we should take out exempted supplies, zero rated supplies, and exempted supplies includes non-taxable supplies. Directly they could have given taxable supplies, because we have only 4 supplies: taxable supply, exempted supply, non-taxable, zero rated. Exempted take out, zero rated take out, non-taxable take out. Then what is left? Taxable supplies. So taxable supplies in a month exceeds 50 lakhs. And they have to pay 1% of the gross liability through electronic cash ledger. And even if there is sufficient balance in the credit ledger for payment of the liability. And to whom this 86B is not applicable? It is not applicable to government and their family members. That is, government department, public sector undertaking, local authority and statutory body. And also, if they have deposited more than 1 lakh of income tax in each of the last 2 years. So why? Because already they paid income tax more than 1 lakh. Again, no need to ask from them to pay 1% through the cash ledger. That's why. And received a refund of unutilized ITC greater than 1 lakh in the preceding financial year. So therefore, whatever refund is eligible to be given to them. Okay. And that to what refund? Refund of unutilized ITC, and that not yet sanctioned, which in the sense like sanctioned but not yet released. So means that refund is with them more than 1 lakh. And now in that case again already their money is with them. Again asking them to pay 1% will not be correct. So that's why rule 86B is not applicable there. Or cumulatively in the current financial year up to that month you already paid more than 1%. Then for that month you don't have to pay anything through cash ledger. Is it clear? So the total 6 cases, not 6 cases. So 7 cases. So this 86B is not applicable. What are those 7 cases? Government department or local authority or PSU or public sector undertaking, that is statutory body, or paid income tax more than 1 lakh in each of the preceding 2 years, or received a refund of unutilized ITC greater than 1 lakh in the preceding year, or paid more than 1% cumulatively up to that month during the current financial year. In these cases, so they are not required to comply with rule 86B provisions. Understood? Then, sir, RCM anyhow we have to pay using cash ledger. Will that be counted for this 1%? No, this is FCM liability. RCM liability anyhow you have to pay through cash ledger. And you pay that and don't say, sir, 1% I already paid through cash ledger. No, it is FCM liability which you have to pay, because anyhow credit ledger we cannot use for RCM na. So therefore RCM always you have to pay by cash. So while computing that 1% cumulatively, you should not take RCM liability, only FCM liability, how much you discharge so far using the cash ledger. Then section 50, interest on account of delay in payment of tax. So we have to pay interest at the rate of 18% per annum to government, and on account of 2 reasons: delay in payment of tax or on account of wrong availment and utilization of ITC. Suppose if there is delay in filing 3B, then interest is computed on gross liability or net liability? On net liability, that is that amount which is paid through cash ledger. Suppose if you filed 3B for a particular month, but you have to pay some tax for that month. that tax you paid in a subsequent month. Okay, for a particular month you have to file 3B, you filed it late, then interest is computed on net liability. Clear that? Then for a particular month you filed 3B, but you have to pay tax for that month, you have not paid, that you are paying in the subsequent month, then interest will be computed on gross liability or net liability? Gross liability. If tax is paid subsequent to payment of self-assessed tax in 3B, interest is applicable on gross liability, that is paid through cash ledger and credit ledger. Then wrongly availed ITC. If ITC is wrongly availed and utilized, we need to compute interest only on the wrongly utilized portion. So how to identify wrongly utilized portion? When the balance in electronic credit ledger falls below ITC wrongly availed, to that extent we have utilized the ITC, on that only interest will be computed. Is it clear? That's what today we discussed, that is January month we have availed some ITC, and whichever month the wrongly availed ITC, so balance in ITC falls below the wrongly availed ITC, in that month we have utilized the wrongly availed ITC to that extent. Okay, and next month 20th onwards we need to compute the interest.